Welcome to the SNN.Network Canada virtual event. I'd like to introduce our next presenter, Richard Kellum, President and CEO of DATA Communications Management. Richard, the floor is yours.
Well, thanks, Kate. So one thing I've learned in my life working internationally is say good afternoon, good evening, and good morning, because I know we have people from different time zones on the line. So good afternoon, good evening, good morning. Look forward to taking through the new DCM, Data Communications Management, and how we're well positioned for growth moving forward. Advance my slide here. And obviously, the first slide, forward-looking statements. Of course, we all know what that means. Okay, so we should be looking at a slide that has who we are here at DCM and why invest. We are a company that's been around for 64 years. You'll see in a minute what our positioning is in the marketplace and who our clients are. We've been a company that has done a lot of print workflow for a number of years, but not just any kind of commercial print, more of the complex print workflow, and you'll hear a little bit more about that as I progress through the presentation. And over the last number of years, a lot of that workflow we have been tech enabling. So we've been doing it through through a digital stack or digital capability. And our objective over the next few years is to increase that penetration of digital or tech-enabled marketing workflow. And again, that's what I'll take you through in this presentation today. So the next slide here, talks about our strategy from moving from conventional print solutions to more of a tech-enabled marketing workflow and a digital asset management tech-enabled service. On that center bubble, our tech-enabled marketing workflow, about 34-35% of our total business starts with technology and then automates workflow for clients, whether that's workflow into print, workflow into digital, or workflow into business process outsourcing. And again, I'll give you a few more details of that as we progress through the conversation today. And off the far right is a new service we're bringing to clients, which is a digital asset management solutioning service. And again, I'll talk to you how we're entering that market and the value we're bringing to clients. We're last year in revenue, 2020, $260 million in revenue, and our latest 12 months, rolling 12 months, we're about 235, 240, James. And we were north of 300 a couple of years ago pre-COVID. So obviously, as a marketing services and communications company and workflow company, we obviously got hit a little bit through or as a result of the economy being shut down. And we're starting to pick up those tailwinds, as you'll see in a minute. So looking at our client list, to say this is where what I would call a real kind of strength that we have in the market, given we've been around for 64 years. We work with 70 of the top 100 corporations in Canada and 3 of the top 5 government agencies. We have over 2,000 clients in our portfolio, of which 250 are what we call enterprise clients. They represent 93% of our revenue. We have a very high loyalty and retention rate at 97%, and a sizable part or sizable piece of our revenue flow is through long-term agreements, 3 to 5 year agreements. You can see the clients on this chart. We work across 7 or 8 key verticals, and there's not a single client that is more than kind of 5 or 6% of total revenue. So highly diversified between clients and highly diversified between verticals or different business types. And the value we bring here, of course, is that we call it simplifying complexity, so helping manage that complex marketing workflow. Again, we'll talk that in detail on the next slide here as I get into how we digitally enable or tech enable that workflow for clients. So we started developing our tech stack well over kind of 10 or 15 years ago. We built a platform we call DCMFlex, and we've seen a sizable increase in client penetration, especially over the last few years, and a sizable increase over the last year, in fact, as well. As workflow complexifies, obviously we needed to build a technology to be able to manage that workflow. So we built a platform, as I said, called DCMFlex. We have over 100 active clients on this platform, about 230,000 users annually, about 8,000 users every single day, and we're processing over 300,000 orders. The platform is built on what we call an API architecture, so we've connected best-in-class software solutions into this platform that allows us to deeply embed this technology into our clients' technology stack. Hence why we call it DCMFlex, because it's super flexible depending on the use case or depending on the client's needs. Lately, we've been winning over 70% of RFPs, and 100% of that is due to the technology. And certainly our last 5 significant wins have been due to this technology that we bring to clients. As I said, 35% or actually the last quarter is 35%. I think annualized we're about 33% of our business is tech-enabled, so it starts with technology and flows into print solutions or digital solutions. And our objective is very clear, is to increase that penetration up to 45% next year. We're well on that glide path, and north of 75% by 2025. Now, the benefit of obviously starting with technology and managing workflow with technology is a much higher retention, much higher loyalty. If we're embedded in the technology stacks of our clients for their workflow, then it is very difficult for those clients to move that workflow elsewhere. And it's generally a higher margin business as well. So very clear strategy to drive penetration of our DCMFlex platform from that 32 or 35% today to north of 75% by 2025. Okay, and maybe I'll just give you a couple of examples here of how this technology flows and what it delivers from a value perspective to clients. And some investors may have heard me use this use case in the past, but I think it's worth repeating. So the cannabis market here in Canada, sizable market, came out of nowhere a few years ago. We have an 85% market share of printed labels for cannabis, not because we know how to print labels. A lot of companies know how to print labels, but because we tuned our DCMFlex stack, our digital stack, to meet the unique needs of the cannabis vertical. There's some very unique needs from a compliance, from a governance, from a regulatory, and also managing fairly complex workflow, massive number of SKUs and relatively low volume per SKU. So that all needed to be automated. So we automated that by tuning our DCMFlex platform. And as a result, now have an 85% share of that vertical or of that market. And as I said, generally higher margins on that workflow as well. Another example for you, for all the people listening, would be private wealth. We do quite a lot of work in FI. In fact, FIs are about 25% of our revenue. And we tech enable a lot of the workflow in private wealth. Think of a private wealth advisor that has thousands of clients or thousands of clients that they're prospecting, and they want to individualize that communication, whether that communication is print communication or digital communication. Think kind of direct mail, email, etc. We can do that or manage that workflow through this automated process using DCMFlex. So you get an email or you get a printed brochure from your private wealth advisor, and that entire workflow has been automated. So it takes rather than a private wealth advisor tapping out thousands of emails, it's all customized and automated through our platform. So there's a couple of use cases. If I had a couple of hours, I'd give you 40 more, but a lot of diversity in how we manage that workflow through technology. Next, I'm going to move to our new business we call ASMBL, which is our digital asset management tech-enabled service. Market is a sizable market. It's north of $5 billion today, projected to grow at over 20%, so it'll be north of a $10 billion market in a few years. Only 1 in 10 companies actually are using anything that resembles a digital asset management platform today. And with the significant increase in digital assets, we all know that, SharePoint and Dropbox or hard drives are no way to manage assets in today's world. So hence the growth of the category, the growth of the business, and, the number of clients that have this need in the market today. You can look at this chart, the share by region, well positioned to where we play in North America, and certainly well positioned to our large enterprise portfolio that we have in our client base. So, big opportunity for a significant growth within the DCM business using our ASMBL platform. Now, a little bit more on the next slide about why us, why DCM. Well, we've been managing digital assets for over 40 years, right? We've been in business for 60 years. We used to take a physical asset and convert that physical asset to a printed asset. Over 40 years ago, those physical assets became digital assets. So we had to figure out how to manage literally tens of thousands of digital assets in our workflow every single day. So we've been doing that for over 40 years. So we're arguably, the biggest practitioner of managing digital assets in the market today. We wouldn't have a business if we didn't know how to manage them. So we've got that, we've got that practical experience. We bring that practical experience to clients every day in those clients' workflows through the DCMFlex platform, but we haven't monetized that, and the opportunity is for us to create a whole business around digital asset management solutioning. We currently have a modest $3 million in revenue that we generate from the assets we're managing for clients through our existing technology. We feel that next year, as we build out our tech stack and continue to penetrate our enterprise clients, we'll be in that $10 to $20 million range. Again, we're talking to 70 of the top 100 clients in Canada. We've got a long-standing reputation, so it's quite a strong position for us relative to, say, some of our competitors that need to, acquire that customer base. We've already got that customer base. It's just about having the right conversations with the right people. So we think it's a big opportunity for us, and certainly in 2022 and 2023, we'll define what the future opportunity is. But we think it's somewhere between 25 and 50 million in pure SaaS. And again, rationale: we've got the technical experience, we've got the practical experience, and we've got the client experience as well. So combine all those three, and we think it's a perfect opportunity for us to build this new business. And it truly is what I call an inside-out strategy. We've been doing this for north of 40 years. Okay. So a little bit about where we're going as a company: tech-enabled marketing workflow, digital asset management solutioning. We're certainly well positioned for top-line growth as we're now into some tailwinds in the economy, with the economy generally open. If you listen to my third quarter call, I did indicate that our funnel was looking very positive for quarter four and into 2022, and we're starting to see the benefit of the economy opening. We've also been very much focused on building a better business as we work to build a bigger business as well. You can see that in our gross margin. We've had 2 quarters this year where our gross margin has been north of 30%, and only 3 in the last kind of year and a half since we were public in 2004 that we've got gross margins north of 30. We've got a clear range to get that between 35 and 40 in the next couple of years, and we've got it's in our sight line. So we've got clear plans to get kind of north of that 35 range as we work to build out our digital offering and continue to build this better business as well. I'm going to turn it over to James real quickly on the next slide to talk about our current debt position. James?
Thanks, Richard. A significant focus of ours has been on paying down debt. You can see in this chart we've paid down more than 54% of our debt over the last 3 years. We'll continue to pay down a little bit more debt over the balance of this year. And I think what we're really pleased to announce is restructuring of one of our credit facilities with Crown Credit Partners, which was bearing a coupon of about 12%. We recently financed that with 2 new facilities that are sub 6%. That initiative will save us about $1.5 million in interest next year. In this slide, you can see how our debt maturity kind of rolls out over the next few years. And this shows our term debt and the current amortization structure within that. We'll pay down a little over $26 million of fixed term debt over the next 2+ years. And, we'll end 2023 with about $10 million of debt, and 2026 on this kind of rate will be debt free. So we're very excited about that progress, and we think that'll create a lot of value for shareholders as that enterprise value moves into more equity value for shareholders. Our current market cap, we're kind of straddling $45 to $50 million. We're about $50 million or 50 million shares on a fully diluted basis. We have strong insider share ownership with directors and officers owning about 30%. An employee share ownership plan we implemented back in 2019 has become collectively a large shareholder of ours. And we have some other kind of key insiders and other shareholders. So a little over 50% of our shares are held pretty tightly by some pretty key people in the business. In terms of valuation, we've prepared a summary chart here which shows our current valuation. We're currently trading about 3.4, 3.5 times EBITDA and about half a turn on multiple. We've showed our comparables in 3 different categories here. Traditional print comparables, and that would include companies like CCL, Transcontinental, Supremex, and our Donnelly, are trading about 7.5 times on average EBITDA multiple on a trailing basis. As we move to more kind of technology and marketing workflow providers, you can see they're trading at higher multiples in the 12.5 range, and tend to probably trade more on a multiple of revenue, which would be close to 2 times. And then as we expand into our digital asset management capabilities and really build those out, there's a part of our business that could be certainly valued at a much higher multiple. Those companies tend to trade in the kind of 9 to 10 times revenue basis, and certainly significantly higher multiples of EBITDA. As we make that transition, we certainly hope to move from the kind of low valuation we are on the left-hand side over to the right. And I think it's important to point out right now that our Donnelly, which would be probably our closest pure comp from a print solutions perspective, is subject to a takeover battle. It's currently trading at about 7 times EBITDA on a trailing basis. So, we think even in our kind of current formation, if we're able to at least attract more of a traditional print multiple, there's some good upside in our share price.
Okay, thank you, James. And sorry, I should have introduced James, our CFO. So James is sitting right beside me here for Q&A as well. So why invest? We think there's huge opportunities for revenue and margin growth. As I said, our target is to get revenue back north of $300 million through digital innovation, get margins back or get margins up between 35 and 40%. I think big opportunity for value creation through this tech-enabled strategy that we've got. It's resonating very well with clients. We're picking up a very high level of penetration or accelerated penetration. As James said, our EBITDA multiple is quite low relative to the marketplace. We certainly have a re-rating opportunity as we accelerate innovation, and we're obviously kind of now into the tailwinds that any kind of marketing and consumer organization has experienced. So it's all positive from a revenue perspective. And as James mentioned, we've been working to build a better business as we prepare to build this bigger business as well. So the significant reduction in debt and that target of less than 1 debt to EBITDA. So a good kind of stable position moving forward. The other that's not on this chart, of course, as I've mentioned a few times, is the client list that we've got. We've got kind of north of 60, we call them commercial leaders, but sales reps that are responsible for that client leadership model, and it's a very kind of envious, in fact, one of the reasons I joined the company, but a very envious position with the strength of that client list that we've got and the stability of that client list. Okay, so I'll thank you here on this final slide and turn it over to questions. And I see we already have a couple of questions that have come forward. So let me just open this part of the platform. So first question comes from Bobby Kraft, and the question is, where would you like to see the company 2 to 3 years from now? So great question. Very clear, 2 to 3 years from now, revenues north of $300 million. SG&A in that 35 to 40% range. Gross margin in that 35 to 40% range. SG&A in the 18 to 20% range. Thank you, James. I'm not looking at my notes right now, guys. I know this by top of mind. And certainly, an EBITDA, an adjusted EBITDA north of 20. Tech-enabled marketing workflow penetration a couple of years from now should easily be, kind of well north of 50%, 60%, and a well-positioned digital asset management solution business for us with ARR a couple of years from now north of 10 million. So that's kind of the objectives that we see as we continue to build this better and bigger business over time. That's what we are. My wife says I use this word too often, relentlessly, but we are relentlessly focused on building this better business while we build this bigger business as well. Okay, so thanks for your question, Bobby. And okay, so I don't think that's the only question we have right now. Okay, wait a minute, see if anybody else has any questions. And if not, we can give a few minutes back to all the participants. Okay, so we moved pretty quickly through that. So, hopefully, simplicity, we love to simplify complexity, and hopefully it's a very clear and simple message to everybody listening today. I think we're well positioned for success over time. And if anybody attending today has any other questions, please feel free to reach out to myself, Richard, at rkellam, KELLAM, at datacm.com, or James Lorimer, JLorimer, LORIMER, at cm.com. We'll be happy to answer any questions. So thanks for the opportunity to speak today, and enjoy the rest of your day, your evening, or your morning, wherever you are from a time zone perspective. Thank you.
That concludes today's presentation, and thank you for tuning in.